Crypto Hotep here with another investing video. We are on week 112 of the Family Portfolio and Dividends Tracker. And thank you again for tuning in as always. Really appreciate it. If this is your first time watching the video, go to the channel, hit the subscribe button, then hit that notification bell so you know every time we drop another one of these videos. Again, if this is your first time watching, basically you're following the investment journey with me and my family. And when we started these videos at week 1, we selected stocks, right? So my family selected stocks from companies that they felt most, that they resonated with, I should say, and knew. And we proceeded to track this portfolio week after week after week as we contribute money to it, as the markets rise and fall. And we just track basically our mental, how we're feeling during these market downturns and upturns, and then also how the portfolio is doing across the life cycle of this journey. So I recently transitioned the family's portfolio from individual stocks to individual ETFs for everyone that most resonated with their picks and their choosings. So again, if this is your first time watching video, I appreciate you guys coming to the channel. And as always, please like, subscribe, comment, let me know what you think on these videos, and we'll try to make this one even quicker than the last one. So really quickly, guys, we'll go through some economic events, I should say. I'm on investing.com this week for the economic calendar, just because the trading economic calendar is acting a little weird, but it's all good. We have other tools here. So we are recording this on a Tuesday. Tuesday's events have passed, and the primary, or I should say the primary thing that did happen today was President Trump did speak. So nothing really occurred other than that. S&P Global Services did a PMI. I normally don't follow that though. Okay, so we can jump to Wednesday tomorrow, or I should say today. Wait, today's Wednesday. Yeah, today's Wednesday. My goodness. So this was recorded on Wednesday. Sorry about that. So we had Tuesday S&P Global, Trump spoke, and then today crude oil inventories recorded, and then also Trump spoke as well, but nothing really too monumental. As we jump to Thursday, we have core PCE price index readings. So Thursday in the morning, we have this. We also have GDP. So this is going to be a lot of fireworks here coming up. So we have GDP, and then we have also initial jobless claims per usual. GDP, the forecast for GDP looks like 1.6%. That means that the U.S. government, or the U.S. economy, I should say, grew over the quarter 1.6% positive. What we would like for that to be is, we would like that to be 1.6 or higher. The previous reading was only 0.5%. I'm really unsure what the GDP growth is going to be here. I don't know if it's going to be less or more here. I'm just going to say hopefully we get to 1.6%, but it's really hard to tell right now. Then initial jobless claims. The last reading was 226,000. The forecast is 225,000. So I think the initial jobless claims should come in a little low, hopefully. So we will see. Okay, so that's about it in terms of the events. Nothing too strenuous, nothing too monumental, except that GDP on Thursday and the initial jobless claims. So let's hop into, before we go to week 112, we always go to the week prior. So week 111 saw us with a balance of $4,346.11, money weighted rate of return of 4.36%, market gain of $151.56, and then dividends earned of $24.09. So what happened this week? For week 112, we are looking at $4,289.80. So we went down. That's a money weighted rate of return of 2.63%, positive still. Market gain of $73.70. Dividends earned of $32.37 though. So we increased our dividends. So what happened between this week and last week? So between this week and last week, we've had a couple things happen. So we had a little bit of dividend activity from our prior individual stock holdings of Waste Management. So that went through. And then we did have a dividend for our SOXX. That's our semiconductor ETF that's in my portfolio here. So we got 14 cents and 4 cents. Not a lot. We haven't held SOXX for a long time, so I really wasn't expecting anything, but all good here. Last week was a deposit week, so we deposited our regular $15 here, and we had several buys. So we bought some Sky, we bought some ESPO, VCR, XLY, and FSTA right there. Okay. And then we actually got some dividend activity. So we got dividends from FSTA, and then we got dividends from XLY, which is pretty cool. So we have both these dividends here, one for $4.90 and then one for $1.42. So we actually did reinvest the $4.90 here, and we bought some more FSTA. Okay. The XLY, I believe that just got deposited. So we should see, let's see if we see any cash here. Didn't really check. So it should be credited soon. So we should see that in the cash here shortly. But for our portfolio, as always, guys, we go bottom to top, and let's see what our portfolios look like. So on the bottom, unfortunately, is my wife's portfolio here. And let's go into it. We have a balance of $608.35, money weighted rate of return of 4.36%, dividends earned of $4.89, market gain of $31.31. So we do have a green position though in FSTA, which is good, up above 2% there. QQQ is down though, so we've had a lot of technology sell-off and AI sell-off in these markets this week alone. So the markets have been bleeding out a lot, and the big heavy hitters for this downturn, unfortunately, is tech. So with QQQ, which is very tech heavy, we're seeing a big downturn. As you can see, we're down about a little bit over -2%. Consumer discretionary, we are also down almost 2% as well. Okay. And let's go to our youngest. Our youngest has a balance of $636.78, money weighted rate of return of 3.82%. Very similar. Again, QQQ, okay, is the laggard right now. FSTA is the bright spot. XLY is down almost 2%, and then the video gaming ETF ESPO is down almost 4%. So if you see what's going on here, most of the markets are transitioning to those longer brand names, those long tenured companies in the consumer staples, as you can see here. So the consumer staple market are more long tenured companies, folks like Colgate, for instance, Home Depot, Lowe's, those type of names, right? So the boring group, if you will. Consumer discretionary, if you can think about it, is basically when the economy's doing great and people love spending money, that's where that money is going. So brand names like Tesla, companies like Tesla, those type of things. Things that aren't really needs, they're more steered toward wants. Okay, so all in all, this is the market in general. There's going to be a lot of ebbs and flows here in the market, so you just need to learn how to ride that out. Let's go to our middle stock. Our middle has a balance of $646.52, money weighted rate of return of 10.91%, dividends earned of $5.30, and then market gain of $55.11. Very similar. We talked about a QQQ, FSTA, and then VCR, which is the consumer discretionary we used for our middle. and then ESPO is still the same here. So again, even though we have these ETFs and these holdings in the red, this is typically where the bigger moves are made, because this is when you want to keep dollar cost averaging in or buying these holdings. Okay, you don't want to stop this process just because the markets are going against you. Okay, let's go to my stocks. My stocks are, my balance has $1,192.96, money weighted rate of return of just 0.13%, dividends earned of $9.89, and the market gain is actually a negative 8.40. So again, despite the SOXX and the SMH, despite them, the downturn that they've had, overall we're looking pretty good. We're up in the green, up over 6% for SOXX, up over 4% for SMH, but Sky, the cloud computing ETF, down over 8.5%, and then the cybersecurity ETF CIBR down over 3.5%. However, quantum computing, which the Trump administration did speak solely on this week, and they are signing executive orders to further the studies of quantum computing, and to ensure that the U.S. has some sort of hand in developing this, that we are up over 2%. And again, that's where that quantum is more of the future. It's a very risky play, but again, for my stocks here and my holdings, I am, and I gotta stop saying stocks because they're not individual stocks, they're ETFs, but for my ETF holdings, this is more of my 10-year, 15-year long-term play here. And quantum does fit that mold, as you can see. So all in all, I'm still good with my portfolio. Yeah, it isn't where it needs to be, but again, it is a very volatile and a lot of risk for that portfolio. So you got to take the good with the bad here. And then last but not least, let's go to our Otis. Our Otis has a balance of $1,205.19, money weighted rate of return of 4.27%, dividends earned of $8.19, market gain of $40.09. So again, similar. QQQ down over 2.25%, XLY down almost 2%, but those consumer staples holding it up at above 2% positive. Okay. It feels really good though. I will say this, since we made that transition over just the ETFs, and we can close this video out, really good that I have all my family invested in the QQQ. I like that feeling. I like technology, and it feels good that my family can invest in that and be the recipient of those gains for that, and then even it out with the consumer staples as well as the consumer discretionary funds as well. And again, the reason why we went straight from individual stocks to ETFs was simplicity and not having to worry about keeping individual stocks that maybe lag behind or ones that have a bad year, have that put a dent in us generating generational wealth for our family. So this is more of the cruise control type of investing with ETFs, and I'm completely fine with that. These make me want to buy the dip even more. The thing about individual stocks is those individual stocks could dip even further than ETFs can, right? So those individual stocks, because it's just one stock, those can dip down further. With the ETFs, because you're holding a basket of stocks, if one goes down, there's usually several more that'll bring it right back up. So, but as always, guys, thank you for watching the video here. And for week 112, we had a balance of $4,289.80, money weighted rate of return of 2.63%, market gain of $73.70, and dividends earned of $32.37. And hey, we're at 14 minutes. So as always, guys, if this video was helpful, feel free to like, subscribe, comment, share the video, tweet it out. Let me know what you think. But as always, thank you. Happy investing, guys.